and welcome back. You're watching, this edition of addressing the state of the economy. And while the December 2020 IIP and Jan 21 CPI inflation did show, some positives, I think today's edition that has been released for Jan and Feb once again is not showing the best of cues. The IIP once again has contracted by 1.6% versus an estimate of a growth of 1%, whereas the Feb CPI has risen to 5.03%. The estimate was 5% over there. Remember that for the last few months we have seen this steady contraction come by, but now I suppose last month, because of the surge in fuel prices, I would imagine that is a big contributor over there. There has been once again a rise in the CPI. Additionally, I think last few months, of course, like I said, there was also the falling food inflation that did its bit in compressing retail inflation. I'm just waiting for Artika to show the other internals. The intermediate goods output growth at 0.5%. This is IIP as well. Primary goods data as well shows just a little bit of a positive. Infrastructure has turned positive 2.3% versus negative 0.3%. Remember, by the way, in Feb, the IIP had gone back to the pre-COVID levels of Feb 2020. Consumer durables still stays in the negative 0.2%. Okay, combined food price inflation is at 3.87% for the month of Feb. This is an important one. The food price inflation is at 3.87%. Okay, I think we are joined now by ET Now's consulting editor, Maithili Busnarmad. Maithili ma'am, I suppose a big chunk of the inflation, rise that we are seeing to that 5% level is being contributed by fuel. Plus, it's being accompanied by a contraction in the IIP yet again.
Well, yes, not good news at all. And as you mentioned, last month at this time we thought there were some, the silver green shoots, whatever we were talking about. We did see some faint signs because the IIP turned positive. We saw the CPI coming lower at 4.06. And now we've seen exactly the reverse. We've seen CPI, in fact, going up to 5.03 and the IIP contracting 1.6%. So not good news at all. Exactly at the time when government was claiming that recovery is here, recovery is for real, recovery is here to stay. So not very good news at all, I would say, because clearly that means that we still have very much in the woods. We cannot be sure that we're out of the woods, and this is despite the fact that government has started spending from November last year. So not good news at all going into the weekend. IIP contracting, and manufacturing also has contracted 2%. Just when last time we saw manufacturing actually turn positive. So certainly I think the government has much thinking to do over the weekend about what can it do to show that the recovery that we saw, the faint signs of recovery that we saw last month continue and we do not have a further disappointment in the month of April. With that, let me ask you, Aditi, what are your initial reactions? Are you as disappointed as I am, or do you think this is just one of those things that one has to live with, given the fact that the data is very subject to change, very initial, and we really do not have any clear means of collecting data at a time like this?
Thanks, Maithili. I am disappointed. In fact, both of the numbers have come in weaker than what we were expecting. We've seen the CPI jumping back to 5% in February itself. We expected that the CPI inflation would get there in the current month. So we've gotten there faster than what we thought because of food prices and because of clothing and footwear. And the core has hardened as well in line with what we were penciling in. On the other hand, we did expect the IIP to deteriorate as compared to December, but not as much as it did, and we certainly weren't expecting there to be a contraction in the month of January. So I must say that I am disappointed by that data, and it is serving us as a reminder that wherever we are seeing some specific sectors which are showing good growth numbers, we must actually check two things. One, whether it looks like it's going to be durable or not. And secondly, there are some sectors which are actually showing good growth numbers but on a very low base. So overall, where we are seeing sectors getting out of the woods, I do think it's on a very low base of February and January 2020. And that is something we must keep in mind when we are gauging the strength of the recovery going forward. So as of now, I would say the economy has entered very much into a consolidation phase in this quarter. We're not seeing a sharp recovery anymore. We're seeing a stabilization or a deterioration in the bulk of the sectors. And therefore, we are keeping a tempered view of the pace of GDP expansion in this quarter, GDP expansion.
blessings, quote unquote, of the fact that our manufacturing sector's share to GDP, something that we've been trying to raise so desperately to 25%, we haven't had much success. But precisely because of that, when we see a contraction in IIP, it doesn't really impact the overall GDP growth very much. And particularly because the lockdown restrictions were being lifted, the services sector, which actually contributes significantly to growth, might come to the rescue. So are you hopeful that the overall GVA, GDP numbers for the year as a whole will remain at that -8%, or do you think that will also show a deterioration?
So, Maithili, let me put it this way. On the GVA side, I believe that the pace of growth will improve to around 2.6%, which is just about where the NSO expects it to be. I'm not convinced that we're going to have such a massive difference between the GDP and the GVA growth in the current quarter. Definitely GDP growth will be lower, but will it be as much of a contraction or what the NSO has penciled in? We'll have to wait and watch on that. So what we expect is that for the full year, the GVA contraction will be in line with the NSO's estimates, but the GDP contraction may be closer to around 7.4% instead of the 8% that the NSO is penciling in.
Okay. Well, unfortunately, I'll have to just interrupt you right there. Aditi as well as Maithili, thank you so much for joining us for a quick take on the IIP CPI data. Not exactly the best of news this at a time when the government, of course, is grappling with several other issues as they usually are. But on that note,